Welcome. This is your market analysis for the week of October 10th through the 14th. I am your host, Kadeen Shaw, and I'm going to go through some market analysis for you real quick. I'm going to go through my major ticker, the futures. The futures market is right now open, as you know. I'm going to point out some zones that I've been looking at and I'm continue to look at, and I'm going to point out, just do a recap of what happened last week, what zone I was looking for, and how price actually respected those zones as I was looking for them. So for those of you who are in here, welcome. I'm going to have this to you guys in a second. So let's start with YM. Again, like I mentioned, the futures market is currently open. It is 7:04 p.m. Eastern time. The futures market has been open since 6 p.m. Eastern time. And then the Forex market, of course, has been open since 5 p.m. Eastern time. You already know Bitcoin, cryptocurrency open 24/7. So that's another market and a whole nother story. All right, so let's get into the market right now. So the first thing I want to look at is YM futures. And I'm going to start with, let me go to the weekly real quick just to see anything. I don't see anything really on the weekly for YM, but I'm going to start with the daily. And what I'm going to do right now is to kind of review what happened last week. So last week we went up into a daily supply zone. And as you can see, we gapped up and we were in this daily supply zone. And we kind of actually consolidated for a little bit. So for me, I knew for myself, in addition to us being in this daily supply zone, this was my weekly high for last week. And I'm going to show you that same weekly high for this week. Or what am I speculating? The same way I speculate the daily highs, I do the same thing for the weekly high. So when I saw this nice run up, second rally on the 4th, now I saw this candle right here on the 5th, which is October 5th, this candle actually, it ranged, it consolidated. So a lot of time whenever the market do a nice run up, when you see a big move to the upside or to the downside, the market consolidates. All right. So get this math real quick and write this down. The market consolidates 80% of the time. So out of 100, 80% of the time frame, the market is in consolidation mode. So that means the next 20%, that's when we're seeing big moves, impulsive versus usually impulsive moves. So just get it in your head that 80% of the time, the market usually consolidates. All right. So that's the math for you, some data. So now when I saw some of the things I saw on YM or just in general overall in the market that I was anticipating this bearish move to fall back to close the gap. And I'm going to show you why. The first one is this candlestick pattern, which is a bearish Haramni. What does that look like? A bearish Haramni is when you have a green candle all the way up, a nice long green candle. And the second candle right after that is a bearish candle. But look at this bearish candle. Let me make it a little bit bigger. For it to be a bearish Haramdi, you need a long green candle with this second smaller bearish candle. And the body of this bearish candle should be completely inside of this green candle. You can see that the high for this bearish candle on here was literally lower than this one. So this body from here to here is contained inside this long green candle. So that was my first bearish pattern that I saw forming. Okay, I knew the market was getting ready to turn. That was one of my first confluences. Second one that I saw, again, we were in a supply zone, a daily supply zone. So I knew that, it was time for us to somewhat retrace. Second, the next one I saw, again, this is when the reversal started. The reversal move after we had this long impulsive, this is when the reversal started. The retracement move started back up, and I noticed that price at this level was at the 38.2% retracement level. So I know it was probably potential time for it to drop. So that's what it looked like for YM. What am I looking for on YM right now? Since the market is open, as you can see, price actually came down. These two yellow is going to be my 1 hour zones. And this is 1 hour as well. So these two yellow is 1 hour supply. These two is 1 hour green. Currently price is inside of a 1 hour green demand zone. So I'm looking to see potentially price is going to be able to go through. As you can see, we still have until the rest of the night. The market just opened. This already ate up the entire 1 hour demand zone. So I can potentially see price still coming back down, but I am seeing some rejection. You can see this long wick. Price came below this 1 hour zone, but it's starting to kind of push back up. But we do have this wick that may act as support. So I'm looking to see as price come down, if price is going to be able to come all the way down here or even into this daily zone right here, this demand zone before the market opened, the U.S. market opened tomorrow morning at 9:30 a.m. Eastern time. So that's YM right now. So just to kind of look at YM, also look at YM, 29,543 is a nice resistant level that I'm looking for as well, because on Friday, it was initially support. You can see it was resistant. It went from support to resistant, right? It was resistant here. It served as resistant, and then it actually broke through and now served as support, and now it broke back through. So now I'm looking to see when price do come back up to this red line, is it going to act as resistant and push price further back down? Or are we going to be able to break it and then push up to the upside and continue this retracement move to the upside? So that's why I am. Let me go to ES. ES at the same place as well. ES did also, just like YM, form that bearish Haramni. And again, that bearish Haramni is like that mother-child candlestick pattern. All right, so look it up if you haven't seen it. It's when we have a bullish Haramni, we have a bearish Haramni. Those are somewhat reversal signals when they're formed in supply zones or demand zones. So this one, we have a bearish Haramni forming the area of a supply zone, in addition to rejection from this downtrend line. So again, I have two confluences here, in addition to some others that I just deleted. So with the same thing happened, this big candle up, we have a big rally up, followed by some type of consolidation, which is a mother and a child candlestick pattern. And then from there, we had a drop. This candle confirmed my Haramni closing because it closed below my bullish candle. So we'll see how that goes. Now, ES, looking at ES, these are my levels for ES. All three of these zones are demand zone, all right? So the orange is a 4-hour demand zone. This yellow is a 1-hour demand zone. And this turquoise is a daily. So I have a daily, a 4-hour, and a 1 hour. So somewhat of a triple demand zone. And I like to chart the 1 hour as well, because I've noticed that lately price has been respecting those 1 hour zones. Price literally has been coming to those 1 hour demand zone and actually rejecting from it and going back up. And then on the contrary, price also have been hitting those 1 hour supply zones and been hitting them, rejecting and dropping. So I had somebody actually send me a message and ask me, why did price stop at a certain area and turned around? And that's because it was a 4-hour zone that it actually rejected from. It was a supply zone in addition to a 1 hour. So again, get used to looking at those 4 hours and 1 hour. I try not to go below 1 hour. I stay with 1 hour and 4 hour. Anything below the daily to see where we're going to find some potential resistance or support. So looking at ES right now, I can see prices literally inside of my 4-hour demand zone. In addition to that, it's currently somewhat rejecting from the 1 hour. And again, this may be short term because the market literally just opened in 1 hour. So we have a whole lot of time to go. It came down to the 1 hour zone. You can see that wick right here. It picked up some buyers and then it's still trying to push back up. So I'm looking to see if ES is going to be able to come even further down into this 1 hour zone, potentially come even further down into this daily zone, where it's going to be that double zone, the 4-hour and the 1 hour. I'm sorry, the 4-hour and the daily, and then potentially see some more movement to the upside before we come back down. So I'm watching those levels for ES. Let me look at, and also I think ES did form that candlestick pattern. That was SPX. All right, let me look at NASDAQ. For those who trade NASDAQ, so the NASDAQ futures, here's what I'm looking at for the NASDAQ futures. And the reason why I actually like NASDAQ. One of the things I'm looking at for NASDAQ, look at this candlestick form on the weekly chart. Last week, I have this green candle form. It is an upside down. You can look at it. It looks like a hammer, right? But it's an upside down hammer. So it's an inverted hammer. That is also, it's also a bullish pattern, right? It's a bullish reversal pattern. This inverted hammer, this green candle, that shows me that at one point last week, remember, the buying pressure was all the way up here. This candle was all the way filled. It was a green long candle that came all the way up here last week until sellers pushed it back down. So what does that mean? That means we do have some buying pressure in the area. With us having this buying pressure and this inverted bullish hammer forming, I'm potentially looking for some more upside before we come back down, potentially lower. All right, so that's the weekly candle. The weekly candle can actually give you an insight of what's to come for the week to come. Now, with price actually gapping down, well, not gapping down, but price, it did gap down to open, as you can see. It gapped down to open, and then from there, you may see some potential to turn around. So what I'm looking at right now on NQ, you can see NQ. What I like about NQ, let me go to the daily. NQ is actually, and again, this is the NASDAQ futures, it's actually in a triple zone for me. A monthly, a weekly, so it's already inside the monthly. It literally just gapped down open inside of the weekly, and then the daily is below it. So I do see, or I'm speculating, I don't know what price is going to do. So I'm going to speculate to see if price is going to be able to come even a little bit further down into the weekly and potentially tap this daily zone before going back up to the upside. So let me move this right here and say I'm potentially speculating price to do that and maybe come up here before we go back down to the downside. So as you know that we do have some more downside to go, especially based on the unemployment report that came out on Friday that caused the market to literally drop in addition to the charts. We do have on October 13th as well. We do have some another report on October to look at. So make sure you look at 4X Factory, and that report is important for October. And also in addition to that, you do have earnings seasons up on us right now. So October 17th, starting October 17th, we have some of those major tech companies that are going to be reporting earnings. So keep an eye on those as well. That's going to probably potentially have a catalyst in the market. So we have a lot going on now in October to come that you may see some more potential downside. But again, we may see a pullback before we see some more downside. So right now, NASDAQ futures is inside its triple zone. So I'm looking to see how price is going to actually react to this triple zone, potentially see a bounce to the upside before we see some more downside to this support level that I'm looking at. So that's NASDAQ. So Russell is currently inside this daily demand zone that I have. It's going through it, and now it's actually, let me go through it. Russell is actually approaching its triple demand zone that I see right here. So I'm looking again, the market is seeming like it's trying to approach this triple zone. So I'm looking to see what's going to be the reaction if we're going to hit this demand zone. Are we going to see a potential bounce back up before we go back down to the downside? On Friday, the VIX rejected from, it came down to this daily demand zone, and it went back up and rejected. So, and I also have this uptrend line that it actually rejected from that acted as resistance. But in addition to that, I do have some trend line below that. So VIX, I'm looking for a breakout on VIX. So you may see some consolidation in the future to come, a little bit of consolidation, because the VIX is literally trapped between support and resistance. In addition to that, VIX has been playing in this triple supply zone, for literally about 2 weeks now. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. Yeah, 2 weeks. It's literally been playing in this triple supply zone as if it's not trying to go up or go down. So I'm curious to see when the VIX break out, then you'll definitely see where the market is going. But again, keep in mind as well for November, which is next month, the VIX has, as I mentioned, over and it's probably more than that. I haven't checked it now, but over 1 million open contracts, call contracts on the VIX. They're over. So that means that you have these investors that are betting on the VIX to be going up because they're expecting the market to go even lower. So they've opened 1 million. I have, when I checked it last, it was about 1 million call contracts on the VIX. And the reason why they're doing that is to hedge their position. And these are long-term traders, long-term investors. So they're trying to, with the market dropping and they're losing money in their 401k, in their whatever fund they have, their long-term investment, because they're losing money. What they've done is to kind of fight volatility. They went ahead and put some hedging position in, which is some call contract on the VIX for November to kind of stop some of that bleeding, if you may. I also noticed that Dow rejected from this daily supply zone. It went down, and initially this zone right here that you see me have right now is yellow with red inside. It was actually a demand zone that Dow was rejecting from. It rejected Wednesday. It came and price came. So this demand zone was holding all last week, and it was a 1 hour zone until the unemployment report came out and the market went ahead and dropped on Friday. So it dropped through that. It was a demand zone. So now it's a 1 hour supply zone that I'm looking at right now. So this is DJI right now for me. I'm still looking at this area for DJI that I pointed out a few weeks ago, a couple of weeks ago. I pointed out this area that I'm looking for. So I'm expecting price to come down. These two dotted white lines, these are, this is a weekly gap and it's a buyer's gap, which is a bullish gap. We started filling it and then it left. So I'm looking to see if this week now, if price is going to be able to come all the way down here and fill this gap before it turned back around. So this area for me is going to be important. In addition to that, on the Dow, we do have a triple zone. I do have, let me make this a little bit bigger. As you go down, I do have this level here, this green line. And I also have this turquoise line and this white line. So this area is a triple zone for me. So I'm looking to see if Dow is going to be able to pass through this daily, potentially come down and maybe close the gap and do a bounce, or maybe come a bit lower before we do a bounce. So that's what I'm looking at for DJI. In addition to that, look at this candlestick formation, I think on the weekly. It does have this long wick as well, just like all the others that's showing buying pressure. So I do see a bit more upside coming because buyers are in the market. And again, a lot of time you see these buyers coming in, what's happening is these long-term, like I mentioned, investors, what are they doing? They're actually buying to cover BTC. They're buying to cover their position. So again, the market is dropping and you're losing this. Whenever you're a seller, you're short selling, and you open the sell and you buy the cover. So right now with all this market and all this red that we're seeing in the market, whenever you see this, the fact that the market went lower than what it did in June, we have these investors now, because they're now losing more money. What they'll do is they'll buy the cover. They'll cover their position. So they'll buy the cover. And what will happen is when they buy the cover, you'll see the market shoot up or go up to the top, or start doing bullish rally. In addition to those investors buying to cover, you'll also have these retail traders or day traders who come in, and they'll also be in the market as well, trying to play the retracement move. So that's DJI, and this is the level I'm looking at. So SPX, again, you see this long wick too from SPX, literally from about 38.05 area. That's where my weekly from last week was. The 38.05 level, that was my weekly high. And that's where SPX actually went to 38.06. So it went $1 over my weekly high. And then price came all the way up there last week. And then literally it dropped. 2 days it dropped. So price literally dropped down here. So for SPX, what I'm looking at, you can see that price on Friday, though price dropped, it actually stopped right at this support line that I have at 36.86.87. So price came down into this demand zone, and then it closed above this first support line. So this line is still acting as support. In addition to that, on SPX, what I'm looking for, so this area, like I mentioned, was the weekly high for me last week, right? In addition to that, this is the 38.2 retracement line. So once I saw that price literally gapped up on Monday, and on Tuesday, it gapped even further. Those are two big moves. So I looked at my standard deviation values and see where we were. We were already, right at this moment, we were at 2 standard deviations. So whenever we hit that 2 standard deviation mark, it's time for us to retrace back to the line of regression line, which is that 0 line. So we can see that retracement happen, or that consolidation happen the next day, which is Wednesday. In addition to that, this, like I said, this was the weekly high. So this weekly high for me, when I saw that this was holding, when I saw that price wasn't trying to push above that weekly high, I noticed, okay, this is the highest that the market is going to go for the week. So look for some potential downside coming up. In addition to that, like I said, it was rejecting from the 38.2% retracement line also. So that was another confluence for me, in addition to some other candlestick pattern. So what I'm looking for SPX on the weekly high. All right, so let me give you the weekly value. So for this week coming up, which is the week of October 10th, the area that I'm looking at for SPX is 37.65 to about 38.25. So 37.65 to 38.25 as the weekly high, the high for the week. All right. So if we're bullish, then that's where I want to see. I'm going to look to see what happened in that area, some type of retracement, some type of stopping. As far as us now, the rally going up, I'm looking at the area at 38.50 to 39.15. That's where I'm going to look for any more upside movement to somewhat end permanently or intermediately until we find another impulsive move to the downside, if we do have some more downside. So those are the areas that I'm looking at. So SPX right now, like I mentioned, there is a nice daily demand zone right where XPS stopped. So because there's this nice daily demand zone, you may see tomorrow the market may turn around and start continuing its retracement move to the upside until it gets up to, like I said, this area here for next week, or as high as 39.15 for the week before we drop down again to the for another impulsive move to the downside. In addition to that, SPX also have, so the first support that is that's holding right now is the 36.36 area. Below that is going to be the 35.88 area. So these two support lines, which is these two green lines, they're actually the start and the ending of this actual demand zone. So I'm looking to see I'm looking to see this zone hold for tomorrow. Based on where future is tomorrow, by the time market open, I'm looking to see SPX actually show some rejection from this zone and start going back up to the upside. Keep in mind that we do have this gap up here. So even if we do go to the upside, we might find some intermediate resistance at this level at the 37.10 area. This weekly SPY also had a bearish harmony, this green candle plus this red candle. One thing about bearish harmony or bullish harmonies, the candle doesn't have to be, the baby candle doesn't have to be exactly the next candle afterwards. It can be a second candle or a third candle, but as long as that you have this nice bullish candle with a bearish candle, that's literally the body of this bearish candle is completely inside the body of that bullish candle, then it's called it's an harmony. So when I see that, price literally drop. In addition to that, like I said, price was rejecting from my weekly high, my 38 retracement line, and then we started seeing things going down in addition to the job report. So let's look at this one. So SPY, literally now we have a 1 hour supply zone above, and we have a 1 hour demand zone that it kind of stopped in. So for SPY, I have a support below that at 358 area. Call it 359. I'm gonna call it 360. So round up. So 360 area is my first support, and below that I have 360 to 350. So those are my two support for SPY in the event that momentum is completely down. At my weekly high for SPY that I have currently, I think I just around 375 area to 382-ish. So that way, 370, call it 376 to about 383 area. So that's going to be my potential weekly high in the event that price is rallying up to the top. And my potential weekly low for SPY, I have it at about 350 area down to 343-ish. So 350 to 343 is where I have SPY low. And again, it's based on momentum. If momentum is up, then I'm looking on the high side. If momentum is down, then I'm looking on the low side. And let me give you the low for SPX as well, or that I'm looking for. So I already gave you the high. The low for SPX that I'm looking for is 35.16 area to about 34.55 area. So that's what I'm looking at for the low. And again, momentum has to play a part of it in addition to volume. Let's look at the daily for Apple. So here's one thing that happened. So Apple went into this daily supply zone. It went up and it rejected from this trend line. Not only did it reject from this trend line, it rejected from this daily supply at the top. So what happened? You see this candlestick right here? Not only this candlestick is a bearish harmony, which is this nice green candle upward. And let me make this bigger. It's a nice green candle to the upside, followed by a red candle where this red candle's body is completely inside the green body. So that's a bearish reversal signal. So these are the two, these two candlestick combination is a bearish harmony. However, this candlestick by itself, Thursday, October 6th, that's a bearish candlestick by itself. This is a shooting star. This is one of the one I like. This shooting star is formed in a supply zone or near a supply zone, near resistance. So this was another shot for me to know that, okay, we are going down to the downside. And you can see the market plummeted. All right. So for Apple, I'm looking at for Apple right now. Apple is currently trying to approach. This is a daily demand zone in turquoise. We have a monthly demand zone down here, and I do have a weekly. So I'm looking to see how far Apple can go for this week. I have a daily demand zone down here as well. So in the event the market want to drop all the way down, we can see that. But again, I am speculating that we may see a bit more upside before we see some downside. So I'm just going to keep an eye on that. If I'm looking at Apple, this is a impulsive move. You can see that the market jumped down impulsively, then it retraced a little bit. All right. Then it dropped again impulsively. Then it retraced a little bit. Then it dropped again, retrace. It dropped, it retraced. So right now, you may definitely see another drop or a drop. And what I'm looking at for Apple as well is price is able to drop as far as this level down here. I'm going to like this level, which is the 129 area. I'm going to like this because one, not only if this already a low, if price is able to come here, you're going to have a double bottom form, which is a candlestick, a chart pattern, excuse me. Double bottom. Double bottom means you have two equal lows. I already have a low right here. And if price is able to come down here and stop at the same low area as this, then I have a double bottom. And a double bottom is a bullish reversal pattern. So again, you may see if price does come down here, you may see price literally now turn back around because it's a bullish reversal pattern. Not only is it a bullish reversal pattern, it would have been in the triple zone. As you can see, this yellow, white. So yellow is monthly, white is weekly, and turquoise is daily. So if Apple comes down here into this zone here, I am definitely going to look to go long after I've done my confluences and look and see, you know, what candlestick formation is forming. Take a look at volume and just to see what's going on. Just to look at volume as well. Volume seems to be indicating some downward movement. You can see that from here to here. You can tell that even though price was going up from here to here, the volume was going down. So right now you can potentially see some downward movement. How far down, we don't know. I'm going to see if this area is going to be able to hold before we come back up. But if it passes these areas, then I'm looking to capture something down in this area. But again, momentum is going to be important. Making sure that you watch momentum. Where did the market open? By 10 o'clock, what is momentum looking like by 10 o'clock? What is it looking like by 11:30? And then when 1 o'clock start, where's momentum? So a lot of time when it comes to momentum, I usually look at it at 9:30. I record what was the market momentum. So for example, did it open at negative 0.5 or negative 100? Whatever the momentum is, I record it at market open at 9:30. In addition to what was the standard deviation open. So I record those two things. After that, in about 10 minutes of the market. So the first 10 minutes, I now use the standard deviation charts to see what's going on, because standard deviation helps me. What it helps me do is understand when momentum is changing. So that's what I like standard deviation for, because again, it helped me with momentum and knowing when it's going to change. So I use it for about 10 o'clock or 9:30 to about 9:40. I look and see, okay, what's going on with momentum? Is it changing? And then from there, by 10 o'clock, I kind of have an idea of where momentum will be going for the day, whether it's going to be up for the day, whether it's going to be down for the day, whether it's going to be consolidating. Because again, that by then looking at momentum, looking at standard deviation and do my calculation, I can now tell, and also now start using line of regression. So if you have not watched that video that I sent in the chat, be sure to watch that. Keep an eye on futures to see what futures is doing. As you can see right now, it is breaking through that first. Here we have it. It's breaking through that first demand zone, that first 1 hour demand zone. So I presume it's going to probably break through this 1 hour one as well, and may potentially come down to this daily demand zone before we see a bounce to the upside. So by the time our market open tomorrow, you'll be able to see, depending on where futures is, you'll be able to see where the market is opening tomorrow.